Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So on the surface, or if you look at the indices, you'll see that we pretty much had a nice digestion day. Dow is down, I don't even think more than 30 points or so. The Nasdaq was off a little bit. I can really speak today. That's how bad of a day I had, to be honest. Anyway, with that said, the headlines will say digestion, things look okay, which they do, because I'll show you the chart of the S&P and you'll see that we barely pulled in today. We had 4 up days last week, but underneath the surface, some things that I've been watching were, I guess, weaker. Either I was really in the wrong spots, or there's some under the surface selling going on, and maybe we see some more selling as we enter the new month. But with that said, I'm not going to take the way I traded into the recap. I'm just going to go over the action. And as far as the S&P, you take a look here, you'll see that all in all, as far as today is concerned, look at this down day. Here's the move off of 1357. Here's your double bottom, right? 4 strong days. Yes, did we come back and retest this area? We did, and did it hold? Yes. So all in all, you look at this, you take a closer look here, just at this zone, so to speak, and why not take a day off? The market could use a few of them. So as far as holding this area, which is that prior breakout, which you saw right here, I would even think that the market could be healthy if we came down and retested the moving averages around 1383 to 1386. So all in all, today I would say the market took it in stride. But I guess because I was trapped in Apple land trying to pick a bottom, but I guess I can't be that upset. I got really chopped up trying to play a level versus a level, and there was just no bounce. I say how when you're trying to find a bottom or a pivot, you don't buy, because that could obviously put you out of business if there's no bounce, and there doesn't have to be a bounce. So the way I do it is a level versus a level, and I came in a little long Apple overnight. So right away when we broke 595 something or other, I got out and I said I'm going to try again in the 588 to 591 area. Came to that area, paused, tried to rally off of it, added, made new lows, came down to 585 area, bought some, added, all of a sudden made new lows, and I got stopped out probably 4 times. So within those 4 times, I stuck to the plan and traded a level versus a level, but it still added up. So it wound up being a frustrating day. And if you look here at Apple, it really has been a sell ever since earnings, okay? And I think prudent guys, even like me, I made some decent money short Apple on these 3 days just because I thought maybe we could pull in and get some digestion. But then as we traded down to this zone, I think a lot of guys who made some money fading the earnings gap probably flipped same time I did, around 595-ish, and today was a day that you got beat up. So with that said, the old Red Dog would probably not look at this tomorrow and say it got me pretty good today, but you know what, I'm going to still stick with it. I went out flat. Here's your 50-day moving average. We have a new pivot. So perhaps tomorrow we'll see how it handles this 583, and I'm going to still do the same thing, a level versus a level. Maybe it comes into the 50-day and finally gives you somewhat of a reverse pivot to then start cupping up. But for right now, ever since earnings, it's been a sell. And it's been heavy, and there are guys making money shorted. For me, again, today was the day that I chose to see if I could be cute and pick the level without the market showing me. And you know what? It closed in the dead lows, and I deserved to lose money. And I did. It is what it is. I guess I'll lose money like that every single time if that's the case. Because at least the plan was there. And there were guys that made decent money with a different strategy, which was buying strong stocks that acted well after earnings, because Apple didn't act well on the day of the earnings. It had a red bar. But if you look how Amazon and Expedia acted the day of their earnings with a lot of shorts caught, guys made money buying above the earnings day high for momentum. So if you look here at Amazon, different trade. You look at what we have here. Okay, here's your gap up, and it closed off the lows. I drew this line this morning with Lindsay, and I said above 228.69, it can continue. And it went as high today as 233. I actually played this one pretty poorly myself too. It just wasn't my day because I was long Apple, and Apple kind of just sucked and wouldn't make any progress. So I got out of this a little premature, whereas someone like Mark and someone like Steve Levain, some of those guys, they bought it and they had a nice trade here, nice follow through, showing you that if you're in the right place, right time, you can make money. Expedia also was very similar. where it didn't quite go through the highs and continue, but it was strong all day and gave you some nice trades. I was looking to see if it could break the low and do a pivot, but at this point there was just a lot of strength there, so I didn't even really trade Expedia because I don't trade it well. But guys who did had some decent success. So with that said, there's still cash flow out there in different areas if you wait for the market to confirm your strategy. And the strategy for people in Amazon was like, if it acts well, people are still caught short, goes above that high, get a nice cash flow trade, and that's what happened. Now we'll see what happens tomorrow, but it might not be the same type of action. Also, we were looking at the banks today. I was long some JP Morgan, long some Bank of America, and both started off weak, got stopped out, and now if you look at JP Morgan, I would say it's still hanging around, but it's just lethargic, I guess. Here was that reversal. Remember, we played it for a nice little move for a day and a half, and then it reversed. I should have actually sold it, looking how it closed dead red, and you had a somewhat of a little ascending type channel right here, but I wasn't in on Friday, so I held it. I didn't get stopped out. And then today came into the 50-day and held it. So we'll see what happens here. You do have a channel between the low and the high, and I would say it pierced this support area, okay, and closed okay. So I wouldn't say that JP Morgan's out of the game. It just needs some time. The market's not sure exactly what it wants to do. Goldman Sachs actually acted a little bit better, where it hasn't really done that for a while. If you look here, it was positive all day. This was the move off the moving average. You now have a little bit of a flag type pattern. So tomorrow we'll see what goes on here. Above this area of 1530, perhaps it continues. So maybe that will be helpful for the banks. For me, I'm not in there, but guys, we're long it because it showed relative strength. Look at that green bar today. Well, I just showed you JP Morgan was off the lows, but red. Bank of America, the last few days really didn't act well. So I was giving myself 815 as my stop. So here is the line in the sand. And again, I'm trying to follow my rules, trying to be very risk averse / just tight. And the low here was 819-ish. This one was 810. So I picked a spot in the middle. It went as low as 804, held that prior low, and now we still have to see what goes on here. But this is still not acting so great. So if you're looking for reasons to be a little bit more bearish than bullish, Bank of America, JP Morgan, not acting so well. But on the flip side, you look at some of the drillers, some of the stocks in the energy field. Look at something like Schlumberger. Schlumberger actually looks like it's trying to hold up. It's trying to flag. I've gone over this pattern a few times here. This stock has not been able to break above this type of pattern in a while. You have a big macro downtrend. It's resting right in front of it. Had a nice move off the lows. If you look at this flag type pattern, I did get involved a little bit today just to have some. If it were to start to get through this flag type pattern, I will add for momentum. But right now, momentum's hard to find in the market, so I'll do it very carefully. 74.92 is this flag type pattern. Above there, it really has to get through like 76 for some real momentum / velocity. But if it's right now for a trade, it's worth having on the radar. EOG we talked about today. It continued, so it's showing strength with the market. The OAHs was up today, while the rest of the market was not. So it's still showing you some relative strength. Here's a low, a higher low, another higher low, so a very gradual uptrend. We talked about this reverse head and shoulders pattern that paid very well in the beginning of the year, and then it broke the trend, and now it's seeing if money's going in there this quarter, and it seems as if it is, because again, look at this green bar today above these moving averages into resistance, while the spiders weren't. Let's take a quick look at the spiders real quick. Spiders, remember this spot that was a line in the sand, that 139.36 where it broke out? Well, look what happened today. We went as low as 139.49 and held. It's a red day where you saw the OHs were green, little relative strength. And if you look here, taking a close look, not so bad. It doesn't matter, if I guess, to the S&P that Apple's been down since earnings, if so, whatever. Anyway, here's that gap. This is, I would say, your macro line in the sand. This was a momentum area that guys were looking at. I know for me, I was short overnight the spiders. I covered a little bit. I have a little left. I was thinking about going home flat the spiders, but I do have some longs on, so I wanted to have a little bit of a hedge, but I'm probably net long overnight. and then this, obviously this area held, and this is more of your macro stance. If you want to take a look at the fibs real quickly, just from where we rallied from last Monday to the highs here. So if you take a quick look at that, you will see that we pulled back about 25% of what this move was, which is showing you commitment to this recent rally. We could even pull back to the 0.38%, and that would take us down to 139. And the 50%, which to me is the line in the sand, is right where that gap starts. So 138.44 is huge. Here is very constructive, and here is the line in the sand. So far, going sideways. We'll see what happens tomorrow. We'll see if some new flows come in for the month or not. If you go to GLD this morning scared the living you-know-what out of people, including me. I was like, what's going on here? It sold off really hard, but sometimes they do that in gold to try and get as many people out as they can to trigger stops. So we still have this pattern. This is what I've been drawing for a while, and it takes time. Here's your left shoulder, your head, your right shoulder. And now if you take a closer look at this right shoulder, here's that intermediate trend line that we've been following, and we closed right there. Unfortunately, we have China PMI, so it's going to dictate the action tomorrow. But according to the chart's not really that worried about it. So I'm in a little bit more than a tier 1. This is probably my biggest overnight position in GLD that I've had this year. So with that said, let's hope that GLD is up tomorrow. I could use a better day than I had today. Silver still not acting the best, compared, or acting well. It's lagging a little bit. But if you draw this line again here, you'll see that I guess above this pivot of, let's get this up here. Here you go. This high here of 30.52. Perhaps it starts acting better. Decent day today. Green closed near the highs. Some people are still in tier 1 silver, so I think that's okay. It starts getting above 30.50. Potentially you add to it. Caesar, guys were saying whether or not they should sell it. This has been a very good trading vehicle. Here's buy 1, buy 2, sell some strength, sell some into this wide range bar. We talked about this, and then this is when I think some guys got long when we recrossed this pivot, back to 14s and change. Nice little trade here, maybe a rest, and then at some point trades above this area. But all in all, great little trading vehicle for some guys. LinkedIn also acting very well, still hanging out around this area, which is big time resistance. I know earnings are coming out end of the week, so you just have to be a bit careful. If you are a macro holder of LinkedIn, it's acting very well. If you're a trader, you were probably trading it versus this gap here, and if you did so, it never came in. This was that Goldman Sachs gap. You could have bought it there, and then it acted very well. And now, let's see if we can get a trade above this 110 area, before earnings to give us that trade. Otherwise, we'll have to make some decisions going into earnings. And right now, it's near the IPO highs, which is healthy. New issue, about a year old or so. And this is what you look for in a young growth company. You look for a company that's been public for a while. I am hearing from the sell side that they really like their product now. They're starting to advertise more on LinkedIn. They're using it almost as like a recruitment site. So all in all, I'm not going to get into the nuts and bolts, except for it's acting well. Dips have been viable, and every now and then you get a momentum trade. As far as let's take a look at some guys were talking about. Oh, this is just gross. What happened here? This monster scenario. Someone should look and see where that news was disseminated. But if you go to your 3-minute chart and look here, it was up all day long, and there's just nothing you could do about it. Gapped up, went sideways, and the news came out, and pow. We did actually hear it, and you could have shorted it, but I didn't. I think it was up around here when it came out, and just goes to show you how dangerous sometimes the market is. And I know guys on my desk were next to me were trading it intraday, and if you come back to me with the camera, and I was just like, it's just a little dangerous. When you have headline-driven news, you don't know exactly what's going to happen. So if you're going to play with fire, you can get burned. Some guys will long the pull-in thinking, okay, it's a good level. But when it's in no man's land and people are talking about speculation as far as a takeover, this type of things could happen. So if you're willing to risk for the reward, sometimes it backfires. And some guys that were long it, probably got hurt and had to get out. The language from Coca-Cola was strong as far as them not being interested as a takeover. They're looking to enhance their relationship. That's not what people wanted to hear. So to see anything in the chart, there's not much to see here. It gapped up, came lower. it was really like a wedge type pattern here intraday. And then, I guess this little wide range bar was something that could have got you out of it if you were long it, but then it still was going sideways. So this was just out of the blue. Pow. Know what you're playing with. Know the fire can burn you. So with all that said, the indices took today in stride. After 4 up days, digestion is good. Some warning signs underneath the surface as far as some weakness in some of the banks, but you have some shuffling going into the end of the month. Apple, obviously not the best sign, considering that it had great earnings, decent guidance, and they're just selling it. But I think there's some memories in Apple. The week before earnings was really harsh. People were really pounding it as far as the headlines. So maybe everyone's like, oh, good, I could salvage the trade. So it changed the composure of Apple a little bit, where people are a bit fearful, and there's still a lot of longs trapped there. And so just for me, I'm going to do it again tomorrow. Level versus level. Hopefully we get something, more sustainable bounce-wise, because there was no bounce today. Every time you caught it off the low and you bought more, you got a little stuffed. I'm sorry if I was concentrating on Apple, but recently concentrating on Apple has been rewarding today. It just wasn't ready. So tomorrow's another day, and we'll also obviously be looking at other scenarios in the market. Have a great night. It's only Monday. I'll see you tomorrow with Brittany on the morning call Tuesday. Have a good day. Night.